All right, welcome to your deep dive.
Yeah.
You sent over some pretty interesting market information from today, Friday, March 28th, 2025, covering the stock market. All right, so let's just dive right in. The stock market, Wall Street, a lot of red today. Big hit for the Dow Jones Industrial Average, down 700 points.
Yeah, that's a big move.
That's a huge move.
Yeah.
And the S&P 500 also saw a notable drop, falling 2% to 5,579.46.
Yeah, and that's actually a level that some analysts are keeping a close eye on, suggesting a real shift in investor sentiment.
Interesting. The tech sector also did not fare well. The Nasdaq seeing a similar downturn. Big names like NVIDIA and Tesla underperforming. So why are those particular companies always kind of the bellwether, so to speak?
Well, I think because those companies often represent broader trends in, growth and innovation.
Right.
So when those companies are struggling, it can signal concerns about the future prospects of the tech sector as a whole.
Makes sense. Now, one kind of interesting thing is that the utility sector actually bucked this whole trend.
Yeah.
Showing a gain of 0.87%.
Yeah.
So everything's going down and utilities are going up.
Right.
Seems counterintuitive.
Well, in times of market uncertainty, investors often gravitate towards sectors that are considered more stable.
Makes sense.
Less sensitive to economic ups and downs.
You got to keep the lights on.
Exactly. So utilities are seen as kind of a safe harbor. And our source actually includes analysis from Grok Trade, which characterizes this as a momentum shift and a breakdown, suggesting a potential continuation of that downward trend.
Okay, so let's kind of move to the bigger picture. The U.S. economy seems to be playing a role here. Inflation fears, negative consumer sentiment data, those were both highlighted. How do those translate to these jitters in the market?
Well, high inflation reduces people's purchasing power, right?
Yeah.
Making them feel less secure about their financial future.
Right.
And when consumers feel pessimistic about the economy, they tend to cut back on spending, and that can hurt company earnings.
For sure.
And that ultimately impacts their stock prices.
Yeah. Now, the Federal Reserve's current interest rate remains at 4.25% to 4.5%. There seems to be a little bit of a hint of criticism in our source about this.
Yeah, I think the fact that the Fed hasn't adjusted rates despite these worrying signals suggests a potential disconnect between monetary policy and the evolving economic landscape.
So maybe they're not responding quickly enough?
Some might interpret it that way, yeah.
To these concerns about inflation. And what's interesting, too, is that job numbers were actually relatively stable.
Right.
But the market reacted so negatively, even being described with that strong term, stagflation.
Yeah, so stagflation refers to a combination of slow economic growth and persistent high inflation. And it's a tough situation to be in.
Right.
And I think that's what we're seeing reflected in the market's reaction.
Yeah.
Even with stable jobs, investors are concerned about rising prices, stifling economic growth down the line.
Makes sense. Right. So let's switch over to the crypto market. Bitcoin, kind of an interesting case today, holding steady around $84,000. Flat but feisty was one way that it was described.
Yeah, I think that captures it well.
Yeah.
Bitcoin often moves independently of traditional markets, and I think its resilience today kind of highlights that. And you also have these kind of divided opinions among Bitcoin holders.
All right, you've got
some are still very optimistic, others are more worried. And I think that, really reflects the inherent volatility we see in the crypto space.
Volatility for sure. And while Bitcoin was holding its own, gold saw a pretty significant surge, hitting a record $3,048 an ounce. Yeah. Silver also went up. This just feels like kind of a classic investor reaction to all this uncertainty, right?
Right, absolutely. Gold is traditionally viewed as a safe haven asset in times of economic turmoil.
Right.
So when investors are uneasy about the stock market and the broader economy, they often turn to gold as a way to preserve value.
Makes sense.
And I think the parallel rise in silver really reinforces this flight to safety. And actually, Grok Trade, in our source, described the cryptocurrency market as a wild crypto rodeo.
Oh, wow.
Emphasizing the need for informed perspectives.
So let's bring it all together. For you, today's market activity really reflects these concerns about inflation, the future of the economy, leading to that broad sell-off in stocks that we talked about. However, the steadiness of Bitcoin and this jump in gold, those suggest that investors are at least exploring, some different ways to protect their assets during this time of uncertainty.
Absolutely. And I think, if we connect this to your situation,
yeah,
the varied performance across stocks, crypto, and these precious metals underscores the complexity of the current financial environment, right?
Yeah.
Different asset classes are reacting very differently to the same economic signals.
So a crucial question for you to consider.
Yeah.
In a market where traditional indicators seem shaky and we're seeing these kind of divergent reactions, where do you see potential opportunities, or equally importantly, potential risks for your own financial outlook?
Right.
Definitely something worth pondering as you're navigating the current economic landscape.
Absolutely.
Thanks for listening.
Yeah, thanks for having me.
Yeah, we'll see you next time.
Sounds good.